Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about the industrial real estate market, looking at what's going to happen next, right? What's the forecast? We have Ryan Severino with us. He is with REIS. He's their senior economist. Glad to have him on the line here. And Ryan, it seems like the investment market for industrial properties has been really popular. People are really interested in the space. What are you seeing out there? Where's the volume of these types of properties in their sales?
Yeah, I'd agree. We are, since it's still a little early in the quarter, relatively speaking, we're kind of finalizing our data a bit, but I would wholeheartedly agree that demand is up, and not just for individual deals, but especially portfolio deals, if you can get your hands on one. And this is across the board. Domestic buyers, foreign buyers, everyone is on board if they can get the scale sufficient to meet their needs. And I think that's kind of the one downside to industrial, that the buildings, relatively speaking, are inexpensive, so it can be difficult to achieve scale in some respects. But that said, I'd say we expect volume to come in this year somewhere in probably the $25 to $30 billion range, which would exceed what we were seeing last year, which is kind of in the lower to mid 20 millions, and that would clearly be a post-recession high. And honestly, this just covers sort of individual arm's length transactions. It doesn't even cover portfolio sales, and if you add that in, you're looking at billions more. So I usually try not to be too hyperbolic about things, but boy, industrial is hot right now, and in some respects in ways that we've never seen before, especially when you think about the foreign money that's been targeting industrial. That is a relatively new phenomenon that differs from cycles past.
Yeah, I mean, that's crazy. I mean, it's not that sexy of a property type, right?
No, definitely not. Maybe up there with self-storage, and I don't mean to disparage either property type, but it is probably one of the least sexy property types. It's not office, it's not retail, it's not hotel, but investors are not stupid. They know good opportunities when they see them, and I would say in industrial these days, there's some pretty good opportunities out there.
Yeah, well, it's a clean purchase a lot of times. You have strong tenants typically and long leases, and so I think there's reasons for the demand. And like you said in the previous segment, the outlook is strong. Well, what's this doing to cap rates?
As you could imagine, they are going down. So nationally right now, you are looking at cap rates that are probably nationally in the 6 to 7% range, depending upon the quality of the deal, where it's located specifically. But the caveat to that, I would say, is really good deals, especially the ones where you can get some kind of scale, because it seems like it's almost the opposite of when you're buying a wholesale, because it's so hard to get your hands on deals of that magnitude. There's almost a premium as opposed to a discount that some investors are paying. It's a really pricey environment right now. Good deals I've seen going off in, sort of the 5 to 6% range. So, at least 100 bips spread over where we're seeing national deals. And so if you're, in a key distribution market, or you're a really high quality property, or you're one of those, big sort of newfangled e-commerce distribution centers, or you're some kind of portfolio transaction, there is a market premium in the marketplace right now. So very hot, strong demand. I'd say it's definitely becoming one of the hotter property types these days, no doubt.
Yeah, I agree. I think we may see some really low cap rates on some of these properties that have strong tenants and newer buildings. So what do you expect for cap rates moving forward?
I would expect them to continue to head lower. We are seeing strong demand on the part of investors. Even with construction increasing a little bit, I think the demand is strong enough that it will take that up. And I think there's a lot of money that's still chasing real estate, and with fundamentals, as we mentioned earlier, set to continue to improve in the sector, I really don't see any reason why we should expect anything but sort of flat to slightly lower cap rates. I think we are in a world that's chasing yield, that's chasing good deals, and I think industrial offers a compelling investment thesis right now. And so I would expect it to remain a strong capital markets environment for industrial for at least the next 2 to 3 years or so.
2 to 3 years. So what do you think the impact will be of rising interest rates for cap rates on industrial properties?
Interest rates usually portend better things for valuation and cap rates, and I think the average person is always a little bit shocked to hear that. But what you find when you look at the data is that cap rates and values tend to correlate better with market fundamentals and kind of the overall economy than the pure interest rate level. Because think about it, interest rates tend to rise when the economy is doing better. When the economy is doing better, fundamentals tend to be doing better, and any rational investor is going to pay more for a building with improving, growing NOIs than one with flat to declining NOIs. And so I think the key is the timing and the magnitude. And I mean, even this week, Chairwoman Yellen was saying that even when the Fed starts to raise rates, that they're going to be kind of slow pedestrian pace, that they're even not going to be too aggressive about it. And I think that is a kind of environment where even as rates rise, it will still be a relatively favorable investment environment. And I tend to be the kind of person that looks at, the hard facts and data. And when you look at it, again, as long as they're not too aggressive about raising rates, I think given the compelling thesis and the improving fundamentals, you will continue to see low cap rates and high prices for industrial. So I think the investor community should kind of get used to that. It's likely to stick around for at least the next few years.
Well, that's a good point, Ryan. I mean, almost a rise in interest rate would signal that, hey, that's good news. That means our economy is doing well. And one of the questions I think my listeners have for you, Ryan, is the global economies and their impact on some of these industrial tenants, and then on the sector in general for investment.
What's interesting about the global economy with the dollar strengthening doesn't help exporting so much, but it does help bring in imports and keep imports cheap and competitive. And I think as anybody who remotely pays attention to the data knows, we're still kind of we're a net importing nation, that a lot of the things that we buy a lot of the consumer goods anyway, come from somewhere else in the world. And so with the U.S. economy being relatively strong and economies around the world kind of faltering a little bit and the dollar getting stronger, it makes imports cheaper. All else being equal, you tend to see more demand from industrial space coming from imports than exports, with a few exceptions here and there, but generally speaking. And so, that tends to put increased demand and net absorption for space into the marketplace. So I'm not rooting against the global economy, or I'm not rooting against other economies around the world, but by and large, demand for industrial space is heavily predicated on what happens in the U.S. And despite some bumps in the road here and there, the U.S. economy still fundamentally is performing well. And I think as long as that's true, we should expect to see the industrial sector performing well.
You're right, and we're short on the break here, but I guess also if the economies around the world, or some of them are having issues, then people want to invest in U.S. real estate, don't they?
Absolutely, and I think a lot of people around the world will criticize the U.S., but with a lot of capital markets around the world underdeveloped, we remain the harbor in the tempest. Whether you're talking about treasuries, whether you're talking about real estate or equities, a lot of people put their money in the U.S. because we have the largest, most transparent, and in many respects best functioning financial markets, including commercial real estate.
No matter who wins the election, right?
Yeah, I think, politics aside, the U.S. economy is China in the near future will overtake the U.S. in size, but not in sophistication. It's going to take a while before China's economy evolves to the level of the U.S. economy. So even when the U.S. economy slides into that second spot, it will still probably be the most advanced economy in the world for the foreseeable future. There's a lot of investment opportunities in that kind of environment.
I agree, Ryan. Thanks for joining us today.
My pleasure always. Thank you for having me back on, Michael.
Well, thank you. That was Ryan Severino from REIS. Stay tuned. We'll have more on the industrial real estate market. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.